Hey everyone, welcome to the KE Report, another daily editorial, this time with Joel Elconin, co-host of the PreMarket Prep Show. Check out the link to the PreMarket Prep website to listen to all the recordings of Joel's PreMarket Prep Show on YouTube and on that website. Joel and I are going to be talking about the market turn at the end of the week, seemingly all on the back of Powell's, I guess, slightly more hawkish comments, what the bond market is doing here, and we'll also get Joel's comments on some stocks he's watching and his comments on this continued pullback in the precious metals. So, Joel, first things first, Powell talking this week on Thursday made the comment that the Fed isn't going to be in a rush to keep cutting rates, really pushing back on that, I guess, trend of consistent rate cuts that maybe the market's been hoping for. Markets have rolled over Thursday, continuing to roll over today on Friday. Joel, what's your takeaway from this? Is this a natural pullback or is this something a bit more?
Hey, Corey, thanks for having me. Is Powell finally listening to me? Maybe Trump wants to appoint me on that next head of the Fed. I didn't see the basis for the half point cut. I didn't see the basis for another quarter point cut. And I mean, if say news doesn't matter or Fed comments don't matter, just go look at your charts. Look at the price action from the last hour yesterday. I mean, the market fell out of bed with those comments. And a lot of times the market has a propensity to make a high or a low for a week. Well, you're making the low. You're definitely making the low for the week. So the Bears finally have a winning week here. Now, what that means longer term, we shall see. But I think the honeymoon with the Trump presidency has come to an abrupt end here this week.
Now, Joel, is this something that we're seeing in the bond market too? It's very interesting that the bond market right now is more hawkish than the Fed, and that seems to be a big change from the last couple of years.
They say the bond traders are smarter than the stock traders, and if you look at that TLT since September, the 30-year bond, I mean, that's been in a world of hurt. And just as the bond traders were pushing, we got to cut, we got to cut, we got to cut. Now they're putting on the brakes and they're saying, well, we don't need to cut. We don't need to cut. I mean, right now, unemployment is inching a little bit higher, not higher by historical standards at all. But yeah, you did have the decoupling of the bond market since September with the stock market here. But things are coming back to equilibrium here, and all those cuts, quarter in December may be off the table. Who knows what's going to happen in 2025? But what I've tried to be consistent on the show is saying is that it's not the trajectory of rates necessarily going up or going down. It's about stabilization and rates that banks and people that are out there borrowing money, just stabilization of the rates is more important than anything. I just will say on this red day though, you do have some of your green on the screen is your banking sector here. Bank of America holding up near its recent 3-year high. JP Morgan is in the green here, trading up $3. So there's a lot of red here, mainly the big tech. But as always in this market, there's rotation, and right now, some rotation into the financials.
Joel, what I found so interesting over this last, let's say, month and a half is that the markets have done pretty well. Yes, a lot of that strength came on the back of the definitive election results, but it was also when the dollar was moving higher, when rates were moving higher, not a trend that we usually see. So, what matters for the markets now that we're seeing a bit of a decoupling?
What matters? Price matters. You know that, Corey. If your P&L is green or your P&L is red. Right now, I think the most important thing that matters here is to see if, what's going on with your mega cap tech. You had a rally, right? The last part of the rally here in the Mag 7 was basically old Tesla, right? And you like to see more of a broad-based rally. A lot of these stocks did not make new all-time highs. Apple has just been under continued pressure. Nvidia in the dark today. Microsoft nowhere near its all-time high. They absorbed a lot of the Bezos selling in Amazon, but now that's down 11 sticks. Google down 4.5, Meta down over 4%, Broadcom down 4%. So those are the stocks that got us here. You had the artificial bump with Tesla post-election. But one stock in the Mag 7 doesn't make the whole Mag 7. So I think you got to look for some stabilization here in the mega cap tech, or else be prepared for some more downside. The IWM, which is predicated on getting, really needs higher rates. That got up near its all-time high. That is crumbling too, especially under the species of rates not coming down. So it's all about rotation right now, and right now the mega caps, the ones that lead us, got us here, are taking us down as well.
Yeah, well, that's what we see, right? Is when the biggest cap stocks, how they move really does just move these broad averages. Joel, quick comment on the precious metals, though. You know how much we like to quickly address what's going on there. Gold is off of its highs. It's pulled back fairly quickly. Silver, too. And the gold stocks, GDX, GDXJ, those have been quite weak. It's been almost a straight down move since the election, even slightly before the election. What do you think's going on in the precious metal sector?
I mean, I think it's precious metal sector, but I also think it equates to just about everything except for Bitcoin. And you might be a little bit young, but have you ever heard of the Steve Miller Band?
Oh yeah, I have, but
Take
I am a bit young for that.
Yeah, take the money and run. And that's what you're seeing here. I mean, gold, unprecedented move. The GLD getting up 255, 256. And as always, what goes up, things don't go up in a straight line here. Now retracing, giving back a lot, all of your previous November gains. And now in jeopardy of giving back all of your October gains. Actually, you're in the red below October's levels. So with every move, there's a counter move, and right now it's just out of the precious metals. It just didn't used to be is quite. And I know you've mentioned the dollar and the relationships and with gold and everything. I just think what you have is just a pure momentum market and just about a lot of different things. And when you lose that momentum, when the bots, switch the key from buy to sell, then there's just momentum. And until there's a catalyst or something to bring that, turn that momentum around, that's what you're going to see. You're going to see vicious moves like you've seen it. I mean, it's not just the GLD and the SLV, but there's a lot of stocks. I mean, I don't know if you're a big Mediterranean food lover, but Kava Group, I mean, incredible run, hit 170 on its earnings report, traded down to 133 today. So, just like the S&P getting up near a critical level, people are taking some chips off the table, and it's fine when you can sell into strength, but when the buyers dry up at those elevated levels, this is the kind of price action that you're going to get.
So, Joel, do we need to be worried about a significant pullback here? Something that not just, I guess, is a little pullback here, but could scare markets, could scare investors as we get Trump entering office?
I try and keep an even keel, right? And I try and, be as objective as possible. But there's air in this market right now. Basis the S&P futures, you had just major daily support and the lower 5,700 handle. Then you develop that major resistance at just over 6,000 in the futures, basis the December futures. So for right now, I can't tell you whether we're crashing back down to 5,700, or I can tell you right now, there's much more of a chance that we go to 5,700, which is about 200 points downside, than we do to go back to 6,100. I think you're coming into a period near the end of the year. I don't know if there's going to be some tax loss selling. I just think the euphoria that the market had post election is dissipating now. And until you see, more policies or more actual direction Trump's going in, which is having a really even his appointments are having negative impacts on stocks. I think people are just like, hey, we've had a great year. We've had a great 2 years. I see the path of least resistance lower, especially if you don't get a December rate cut, which like now looks like it's coming off the table. So just like the momentum, you can't, get in front of it on the upside, like that rally that we had. The momentum swung. The bears are in short-term control of the market here, and I'm not sure the bulls want to hear that, but that's the way it is.
The Bears, they are in control right now. But hey, this has just been kind of a short-term transition too. So that's what matters so much. This is, I think, 5 days of trading weakness, 4 days of trading weakness. So we'll see how that continues into next week. And really, it's all about the rest of this year, seeing what comes out of, I guess, policy, U.S. policy, and what Trump says before heading into office. Joel, always enjoyable chatting with you. Again, click that link in the show notes to check out the Pre-Market Prep Show. Again, Joel Elconin, co-host of that Pre-Market Prep Show. Joel, thanks for your time.
Okay, thank you, Corey.